real estate market here in Florida is booming. It's no wonder why more and more people are flocking to the Sunshine State. But when searching for a new home, you're also going to want to find the best rate on a new mortgage. That's where Streamline Financial Group comes in.
My name is Steve Shalaby. I'm the president of Streamline Financial Group. Streamline Financial Group is a wholesale mortgage lender offering access to wholesale mortgage rates to homeowners in Florida. We pride ourselves on offering experience, integrity, and reputation in all of our interactions.
With so many different types of loans available, it can be hard for anyone to make sense of it all, especially a first-time home buyer. So what does the process look like when first getting started?
Pre-qualification is probably the most important step in the process of applying for a mortgage, probably even more so than the application itself. We'd like to take an educational approach where we have a conversation before we even pull a credit report or do anything else. We want to discuss income, credit, and assets. Some of the key factors that go into determining your interest rate are your credit score and the LTV. The LTV is the loan-to-value ratio. Basically means your down payment into the transaction or your existing equity in your property. The bank wants to know how much skin you have in the game. A good time to refinance is going to depend on a few factors. And we like to sit with our customers and talk a little bit before we determine whether or not it's even worth your while to do it. Remember, there's closing costs every time you refinance, and they're very similar to the ones you pay when you first bought your house. But there's oftentimes it makes a lot of sense to do so.
Since Streamline Financial Group also has dual license agents, what are some of the added benefits a client can expect from having the perspective of a licensed realtor when searching for a mortgage?
I cannot tell you how incredibly beneficial it is to buyers to go out and look at homes with their mortgage broker in their back pocket. Once we pre-qualify them, we'll go out and look at houses together. And then to be able to have your loan officer in your back pocket while you look at homes, especially with FHA loans, where the government is very, very concerned with certain things like health and safety standards. Having your loan officer by your side, or being the same person as your realtor, he can tell you what kinds of things are going to cause trouble down the road. So when it comes to condos versus homes, I do have some strong feelings about the two. Sincerely, I think that there are a time and a place for everything. As an investor, for instance, you don't have room for surprises. You want to know that your HOA dues and your special assessments that are going to be popping up from time to time aren't going to diminish your return on investment. You want to plan for your property's upside. So condos, I don't think are a great idea for investors. I think single-family homes, even townhomes, villas are a better choice for investors.
When it comes to finding the best rates, isn't it better to go through your existing bank rather than a brokerage?
Well, your retail lender is going to be your bank or your credit union. You're going to go in, you're going to borrow a loan from them, and as a result, you're going to get a retail interest rate. Now, if you go to a wholesale lender, it's going to be a different basis. With a wholesale lender, I like to use the example of Costco versus Publix. If you went to Publix and you bought a gallon of milk, you're going to pay a certain price. But if you go to Costco, they'll make you buy 2 gallons of milk, but you would save a little bit of money on the 2 gallons of milk. Well, it's no different with mortgage lending. We borrow large sums of money on an annual basis, and we get a discount on those monies, and we offer those savings or we pass them along to our clients. So you get a better borrowing experience with a more experienced loan officer, a lower interest rate, and a more streamlined transaction.
There are plenty of other things you'll need to consider before buying a home, from maintenance to taxes to location, just to name a few.
Number one, how long do you plan on keeping that house? That'll determine the type of loan that you apply for. Maybe you can go out on a limb and get a lower interest rate on an adjustable rate mortgage versus a fixed rate mortgage if you plan on keeping the house for a short period of time, for instance. Another one of the considerations are expenses. Homeowners association dues. Are there special assessments coming down the pike? Are there club or annual membership dues? Expenses are another big part. Another consideration are repairs. What types of repairs are going to be required to bring this home up to par? Is this a turnkey home? Well, I might be willing to pay a little more for a turnkey home. But if there's repairs involved, then I need to factor that in my overall expense. Here in the state of Florida, we're incredibly blessed. We have beautiful sunshine year-round. We have an environment that's incredibly friendly and inviting to businesses and entrepreneurs, and we have no state income tax. It's no wonder people are flocking to the state of Florida by the thousands. Real estate is on the rise, and the future is very bright. If you have any questions or concerns about buying or refinancing your home, give us a call.
Want to know more about mortgage loan services? Visit streamlinefg.com or designingspaces.tv.